Let's break down those numbers now with Martin Smith, Portfolio Manager at eNCA Capital. Martin, as always, many thanks for your time this afternoon. The JSE and the performance that we saw this week, what did you make of it? Not as strong as it started off the week.
Yeah, absolutely. And I mean, we have to look at what the market did last week to kind of see why it had a bit of a breather. Obviously, there was a lot of strength flowing into the JSE last week, and it was up kind of 6 to 7%. So I'm not surprised that there was a little bit of a breather and a little bit of kind of people taking a little bit of risk off the table. And I think we've seen that a little bit in global markets as well, because we've had actually a very, very strong sort of last 3 or 4 months. I think the real kind of euphoria started in November when we had some vaccine kind of information being put out around Moderna and Pfizer. And the 3 months that have followed since then, or sorry, 2.5 months that have followed since then, have been very, very strong. So I'm not surprised that markets have taken a little bit of a breather. Specifically, when you look at valuation in the US, some things do seem a little bit stretched. So at the moment, there's a little bit of kind of counteracting forces. One, there's a bit of euphoria with things looking like they're getting a little bit better. Biden coming in with his kind of approach and stimulus to follow. On the other end, things are looking a little bit stretched, and the markets have run really, really hard. So, yeah, interesting times ahead, I think.
Yeah, and I'm glad you bring up Biden and his stimulus package, because I've been reading on the international markets, Congress saying that his plan, the stimulus package plan that he's got, might be a little bit too pricey.
So you're absolutely correct. I mean, the number that he's formally tabled now is $1.9 trillion, with one of the things involved in that is a $2,000 check to each individual across the states. So it'll be interesting to see how that kind of plays out. Obviously, with what looks to be a blue sweep across kind of the US government, it might be a bit easier to get it passed, but ultimately that cash needs to flow somewhere. And if you look at what you're getting for funds in the bank at the moment in the US, not great, although we have seen treasury yields kind of pick up in the last week or two. But ultimately, I think that could be a reason why markets could stay higher for longer, because there is liquidity and it does need to kind of flow somewhere.
Right, but at the same time, Martin, we did see, as you mentioned briefly a little earlier, global shares falling or taking a breather, as you've said it was. And this is also because of those stricter virus lockdowns that we're seeing across Europe, and really a lot of uncertainty in terms of global economic recovery, despite that stimulus package being introduced into the US.
I couldn't agree with you more. And I think it's something that we will see over the next little bit. And I have cautioned some of my clients in the last few weeks saying, look, we're getting closer to the end than we are at the beginning. Things will eventually get back to normal, and the vaccine is starting to get rolled out. But I think we definitely see a few hiccups along the way. I mean, I don't think it's going to be a smooth ride of rolling out this vaccine across the whole world. And I anticipate a bit of volatility over the coming months. And I think when you've got cases rising the way they have, as well as valuations looking a little bit stretched as they do in certain pockets, specifically in the US, I think you will see a little bit of people taking some risk off the table. So I think it's an interesting one. Ultimately, I'm quite bullish for the kind of next 12 to 18 months, but I'm also not unhappy to have a little bit of cash, take a little bit of risk off the table and have a little bit more cash in my accounts at this moment in time.
You and everyone else, Martin, as always, thank you for your insights this afternoon. That's Martin
so much.
Smith giving us a wrap of your markets day. In the next bulletin, Sally, we will be speaking to SAB about that cancellation of the 2.5 billion rand investment into South Africa. Why and how will it affect future operations as well as jobs?